What's going on, guys? I want to go over the trade that I took today on a No News Monday. This is February 24th, 2025. This is what the 4 hour chart was looking like when I opened up my charts this morning. And so, what I was looking for was more continuation to the downside. And first and foremost, I was looking at this daily pool of sell side liquidity. And then, if we were to go lower, we have the this weekly low down here, and also we have the monthly open acting as a draw as well. So you can see at the 4 hour we have this massive 4 hour FVG, and ideally when you have this kind of continuation through an old low, right? When you have this much displacement and aggressiveness through this kind of old low, you really don't want to see the upper portion of the FVG, which would be right here, get used. So I wasn't expecting any kind of deep retracement into this area. Ideally, just the bottom portion of it was being used, and you guys can see here that the candle bodies were actually even refusing to close inside of this 4 hour fair value gap. And so to me, that was another bearish sign. So then I like to drop into the 1 hour. We were also in a 1 hour SIBI as well. We can mark that out. And we have midnight price. So ideally, and this is our new week opening gap down here as well, which was completely inefficient. So that's where my eyes first went to this morning. And this trade that I took actually was the 350 macro. I waited all day to take this trade because I missed the opening move, which I'll go over here in a second. But we had London high up here, and I was waiting to see if we would ever get some kind of hourly CSD. And this isn't even a valid CSD just because we have an inefficient new week opening gap. So that's why I wasn't trusting this. But just in case, even though we did get this hourly CSD, I wanted to see what would happen at 9:30, and as you guys can see, we just kind of absolutely exploded downwards. So um, I was surprised that London High never got taken, but we are inside of that 4 hour for value gap, inside of that hourly SIBI above midnight. That's enough of a premium for price to go lower. And like I said prior, I don't really want to see the upper portion of this 4 hour for value gap even get used, and you guys can see it didn't. So I missed this entire opening range sell off. The best trade that I saw this morning was this 5 minute fair value gap entry after we hit that new week opening gap, which is right here, just until you could have trailed or trimmed some here, and then obviously manage your trade afterwards. I did miss this entry. I was waiting to see just because there was SMT with ES, and ideally I already wanted to be in the move right after 9:30. So this was the best trade, obviously in hindsight. Um, we came up, tapped the 4 hour FVG, sweeping some smooth relative equal highs, popping above midnight opening price. That would be your premium level, as well as the 4 hour for value gap. And then price has the 1 minute change in the state of delivery here. And once I saw this and the failure to continue to get up into this fair value gap, because this now would be a breaker as well. You have your high, low, higher high, lower low. And you guys can notice what time this happened at 9:30, right? The volatility injection. This high was formed at 9:32. And so that was good enough for me. Once I was tape reading this, this was the perfect entry in my opinion. The change in the state of delivery right here. After the 5 minute order block or the 5 minute fair value gap tap, we have the CSD once again confirming lower prices. Once we close below the opening price of the series of up close candles, that's your change in the state of delivery. And then you could have just shorted the 1 minute order block. But I wasn't even going to really trade today, so that's why I missed this move. I watched all this play out. I didn't FOMO into anything. Price continued just to spool lower. So this is, we make this red. This red line was that daily pool of sell side, and then we have our weekly low here. So first thing I did after a daily level was met, I'm not going to continue to look for shorts until a valid opportunity presents itself. I also use these projections, and if we draw out the middle portion of these projections, you guys can see where we're kind of rejecting off of, as well as this daily pool of sell side liquidity. So 2.5 is where you can find some form of retracement or reversal. In this case, I was not expecting a full-on retracement or a reversal, just because of how heavy the higher time frame's been. But I was anticipating maybe some kind of pullback to a premium level, which would be from this 9:30 high to the 10 a.m. Low. You could also use the London high, I believe. Yeah, so price does get up there. I just used the 9:30 high just because that is an important time liquidity pool as well as London. So you could use either or. They both hit premium level. So that's why I was not shorting anywhere below this area. So in this case, this 15-minute SIBI was sponsoring the move lower. And now this is where I was anticipating price to continue lower. And we had this 15-minute fair value gap down here, which would be a bullish fair value gap acting as a drawn liquidity because price only moves for two reasons. Price is going to move from liquidity to liquidity or to rebalance inefficiencies. And all inefficiencies are just your bullish and bearish fair value gaps. So I saw price retrace back up into a premium. Now that's where we just play the waiting game. I wasn't a fan of trading during the lunch hour. I just kind of let price do its thing. And so now this is kind of where I was interested to see what was going to happen. Price was inside of this 30-minute fair value gap here. And after seeing the 30-minute change in the state of delivery, which we got right here, that's a bearish continuation setup in my eyes. Since we reached the premium level, we're also using a very important area of liquidity. This is that old low, and you guys can see that old low, which is now a breaker. You have a high, low, higher high, lower low. And so old lows that are broken, that create fair value gaps, should be held as resistance if price is going to have a continuation. How do we know that there's a continuation? A 30-minute or a 15-minute change in state of delivery confirming your bias to the downside. That's why this fair value gap here has no value. So 15-minute, same thing. 15-minute change in the state of delivery. You can see after price closes above, we barely tap into that opening price and that lower wick, and then price continues to go lower. So I'm not expecting these fair value gaps to hold here. So all I did was wait for the entry time frame that I like to see, and another key time. Right, I wasn't really seeing anything that I liked here. Not a lot of displacement, kind of just chopping through this area, and so this is now where I was interested. And I also like that every 5-minute fair value gap or up close candle. In this case, I was really focusing on all of the up close candles since those are your bearish order blocks. Every up close candle was acting as resistance, and that's what I continuously saw, and that is why I ended up taking this trade here. So I saw that we created another 5-minute order block, and we had two liquidity pools resting down here as well as this weekly pool of sell side. And I saw that we left this 5-minute fair value gap, and we were also just closed at the 350 macro, so that is perfect. Time is aligned with price. I'm seeing my entry signature, and I entered right at the low of the fair value gap, which was 524. And I put my stop loss at the swing high, the true invalidation point, and all I did was target a 1.5R trade. I did not care if price would take out these lows. We're getting closer into the close of the market, and it is a no news Monday, so I didn't know if it was going to mess around and not take these lows. I was completely content with having a 1.5R trade on a day like today after waiting all day, and I had zero drawdown on this entry. Actually, NQ doesn't even get in here, which is, I took this on MNQ, as you guys can see here. I guess the NASDAQ didn't get in there, but the micro did. I took 8 contracts short here, right here at 524. Stop loss, same thing, swing high. And 1.5R trade, which is right here. So very nice, 48 points in the day, literally zero drawdown. I got filled and pretty much hit my take profit in the same 5-minute candle, or did hit my take profit in 2 minutes. But I guess maybe since this weekly sell side liquidity pool was down here, and we have two relative equal lows, two failure swings resting beneath there. That's why I could have held for that, but I'm completely content with this 1.5R trade. Wasn't even planning on trading today, but I hope you guys see how simple my trade plan is and kind of how I form a trade idea and what confirms what I'm looking for. Really just the 30-minute change in the state of delivery, as well as hitting this premium level here, trading into a higher time frame FVG, you can see that's an hourly fair value gap, hourly bearish fair value gap with an hourly breaker, and we're in a premium of the range as well. And then we have the 30-minute change in the state of delivery confirming everything, and then all those down close candles or up close candles confirming to me that I am on the right side. And all you need is your lowest hanging fruit objective, like I did, and however that is for you, you guys can manage your own trade. But literally just 5-minute fair value gap, 5-minute order block, 30-minute change in the state of delivery confirms that the reversal is going to continue, and the higher time frame is sponsoring the move, and I align myself with the higher time frame order flow. So I hope you guys enjoyed this video, and I'll see you in the next one.